I'm not even active. Oh, yeah, I am. 2 views? What? Streamed 6 days ago. Okay, there you go. 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 Streamed 6 days ago. Alright, quick update. Let's go to. 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 Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Let's go to. Alright, quick update.
Good job, Darge.
Good job, y'all.
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 Good job, Darge. 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 Good job, Darge.
So tune in, guys.
I want you, show me,
when Bitcoin had the ETF story itself. This doesn't bother me. Welcome, ladies and gentlemen, to the New York Live. Traders Reality here. Tino, that is my name. What's the story? Man, cryptocurrency is so bloody boring right now. You can see that with Bitcoin's price action. But today's video, live, I'm going to give you an update for the holders because it's really important that we understand where we are in the marketplace. Now, we've got news coming out this week which explains why we're not really seeing the volatility in Bitcoin. And I've said this before.
By the way, for Bitcoin, mark my words, okay? Okay, I might be completely wrong. Why trust a 18-year-old, right? With this shit, but I really do feel like this is just a huge M pattern forming for Bitcoin, and you gotta be careful, bro.
Sorry for
Quickly,
your stream.
please.
You remember your suit and tie that you used for your... Where is it? I need it.
I don't know if I have it though. I don't know.
Oh no, I really need a suit and tie.
Okay.
Because on Friday I'm going up a grade.
I'm not sure, okay? Can we talk about this tomorrow or something?
So you're kinda not? So you're pretty... No, because...
Sorry, kinda, yes.
Because if it's a no now, I need to tell Mom that I need to buy a new one.
Ask Trinity, because Trinity used it last. Not me, bro.
Trinity said you used it last.
No way.
Then I'm gonna have
The
to
one,
buy a new suit.
the one that you used? No, the one that's your size. Definitely, I did not use it last.
I'm pretty sure I'm just gonna tell Mom that.
Bitcoin, in my honest opinion, if you challenge it, happy days. I don't care. But I genuinely believe that Bitcoin gives us the heads up on where investors are really at. The S&P 500 requires a lot of liquidity to move it up and down. The Nasdaq, the same story. You've got Nvidia, the same story, $2 trillion plus market cap. Bitcoin, it's not yet in the $2 and $3 trillion market cap just yet, but when Bitcoin is holding, it kind of gives us a heads up that if everything else is going up and down crazy and they're all responding to macro events, yet Bitcoin is holding out, when you look back at times, when Bitcoin makes a move, you can marry up to the idea that the macros all came in line with it. So let's just understand something. Bitcoin ETF, the speculation on the ETF itself led to Bitcoin to climb. But as we were getting closer and closer to the deadline, Bitcoin kept on going up. Sound check? Happy days. So what I'm trying to say to you is when we see Bitcoin trading sideways, this is where we need to say, where are we macroeconomically speaking? Now look, I've said before, as a scalper, I have no interest in what the macros are. But because we are in a macro-driven environment, we have to pay attention to it because that's going to give us the idea of how long a move to the upside is going to last or a move to the downside is going to last. And it's really important that we focus on it because we're waiting for one thing to happen, and that is, are the Fed, will the Fed start cutting the interest rates? This is what investors are waiting for. Now, we've had a little bit of madness going across the world right now. The Eurozone is cutting its interest rates, but they always say that whatever happens in the US happens in the Euro, happens in the UK. But the Eurozone is cutting interest rates sooner rather than later. But the US looks like it's going to be holding out. You see, the US has pretty much put in the bin the idea of a recession. So now we're talking about the idea of a soft or a hard landing. Now, if we do get into the hard landing, that will naturally lead into a recession. They're not labeling it as this could be a recession, but they're going to call it a hard landing. That's what I believe is going to be happening. So what does this mean for holders or Bitcoin holders? Well, don't come at me and be like, Tino, you're negative. I'm not negative. I'm just laying down the foundation so that when you go to buy your Bitcoin, you're not buying it because it looks good to buy. You've got to imagine how these hedge fund managers behave. Look at what's going on with BlackRock. BlackRock have been buying much Bitcoin in the ETF. Nothing's really been happening. Okay, granted, the Australians, did you like that one? That's not a knife, that's an ETF. Ha! What? Anyway, what I'm trying to say to you is if we align ourselves with how investors are preparing for the market's future outcome, then we're going to be positioning ourselves to be in favorable plays with Bitcoin. What do I mean by that? It means that you could make the assumption that you're buying at the right time. So I'm going to dive into a few concepts in this live stream, ladies and gentlemen. And by the time we're done with it, I think you should have a lot of information where you can sit back and be like, right, I want to buy Bitcoin. Should I do it now? Or should I wait? There's two types of holders. There's the holder that's micro sailor style. I don't care, I'm buying Bitcoin. This isn't for you. And the reason it's not for you, because all you care about is just buying. So it's just
And you don't have enough
Pokemon cards. That's it.
liquidity,
Get as many as you can. And hope you hit the glory shot, whatever it is. Right? Now, you've got the other holder who wants to make money by holding the Bitcoin, but he's happy to get rid of his exposure and then put it back on as and when. And I'm going to be focusing on the latter. And that's important because we need to have a bit of a strategy when it comes to buying Bitcoin. So if you are new to this live stream, ladies and gentlemen, and whatever you can get from this live, be sure to like and subscribe on the way out. I hope that I can serve you all today with what I'm about to reveal. Let's have a conversation, gang. Here we go. So, we get started off with Tom Lee. Now, this is an old article. Now, a lovely gentleman who's one of the platinum members suggested to me to dive into this with Tom Lee's Bitcoin price prediction in line with the interest rates. So, Tom Lee suggesting that Bitcoin will reach 150,000 before the year end. This article was done in March the 6th, 2024. Now, what's Tom Lee famous for? Well, Tom Lee is a very well-respected strategist when it comes to, he is Tom Lee managing partner and head of research at Fundstrat. Now, recently, courtesy of a gentleman in the membership, Tom Lee's got a price prediction, or calls, for the S&P 500 to end up at 5,500. July 1st. Well, that's knocking on the door very soon. Going into the S&P 500. And this is all relevant for the Bitcoin holders. So don't dismiss this. Stick around, because it's all going to marry up to Bitcoin. This is the S&P 500. We are trading at significant highs. They're doing very well to hold out. Even if the S&P were to come all the way down towards 5,063, that's no problem, okay? We've got too many news announcements that can impact what the market is going to do. You see, the problem that we've got is this. The stock market right now is getting into the idea that bad news is good news, but only for so long. We need to see the US economy struggle. Going into the data, you can see that yesterday there was contraction in the US economy, and it did contract down, it's still above 50. So that's good news. But going into this article here, it does say that stocks got a shaky start on the first day of trading in June, and some market watchers expect more summertime blues ahead. So why are they suggesting that? Well, look at where we are in the stock market. Now, this is the daily time frame, and I've said this before, okay? For every time they create this structure, could we be of the idea that this could actually end up happening? Go back into 2007, 2008 subprime mortgage crisis. Look at what happened, okay? There's your subprime mortgage crisis. If I do this, tell me why we are not in exactly the same boat. Someone would look at this and think that we are in the current day and age. This is exactly where we are. We've got the exact same range, but this is at the 1,522 zone. This was before the subprime mortgage crisis, okay? We're in that topping out feature. When I say topping out feature, it means that the stock market effectively is at its height, and investors are starting to get a little bit concerned with the way the stock market is responding to the idea of the Fed cutting the interest rates. Going into other articles, you can see stocks futures points to losses as data shows doubt. What doubt? The doubt is, will the Fed even cut their interest rates? If the Fed doesn't cut because the US economy is doing good, they have no reason to cut and they'll still stay in line.
OJ, why is the dog outside?
That go with the S&P going to 5,500 by July 1st. That, for me, ladies and gentlemen, would be a climatic move.
Yeah, but why is the dog outside?
5,500, which would effectively then bring the S&P back down. JP Morgan was actually calling for a correction of around 20% in the stock market because value is all over the place. What do I mean by that? It means that too many stocks are back the S&P back 500 by July 1st. That, for me, ladies and gentlemen, would be a climatic move. That would be the sweep to the upside. 5,500 would effectively then bring the S&P back down. JP Morgan was actually calling for a correction of around 20% in the stock market because value is all over the place. What do I mean by that? It means that too many stocks are back in value. They are so overextended. But look what's going on. Now, 4 distribution days and the S&P has 4 distribution days. So this is days of heavy selling. Now, historically, when you see distribution days mounting, if they are breaking down significant structures, then investors naturally look at that and say, you know what, maybe the market's going to go down. Now, when we bring the charts themselves, you can see that the Nasdaq over here, bring it up for you. Here you go, there's the Nasdaq. It's trading at weekly highs, so we're good on the weekly chart. Going into the day, you can see that the distribution days have been mounting, but they haven't actually broken price down. So the stock market is doing good, but they are only holding out because they're waiting for that one Fed cut. If you go to here, the Eurozone, they're at the cut. Okay, 0.25. On the interest rates. And there's some reluctance, like, why are you cutting now? The US ain't cutting, why are you cutting? Which means that the Eurozone itself can see some favour, because it means now business can cost less. But they might actually get it wrong, because this is what the article goes on to say. They're saying they could be getting it wrong, which means that we get an deflated dollar. The dollar's taking a nosedive to the downside, and the euro just keeps climbing up because it's now costing them less to do business. Now, with that being said, ladies and gentlemen, going into crypto for the news, I'm going to relay all of this back to Bitcoin. You've got the SEC ruling the Ethereum ETFs with market start shifting crypto investing. It's the same BS story when Bitcoin had the ETF story itself. This doesn't bother me. I'm not interested in this. The biggest macro that we need to focus is not on what Ethereum is going to be doing, okay? It's what the bigger marketplace of money, what's money going to be doing? To even go back into the idea of the Ethereum ETF, it's still an asset, and they need a reason to buy it. Forget the crypto enthusiasts. They're going to be stepping in to pick up the Ethereum ETF. We know that with all these guys right here, and how the big boys been playing the ETF so far. Going into the article, but in his website, where is BlackRock? BlackRock ain't doing nothing right now. Why is BlackRock holding out on the Bitcoin ETF? Well, let's just go over what's going on in terms of bids in the office. This is Bitcoin on bid and the office, okay? And we understand that Bitcoin is trading sideways, right? We go back to the S&P, we look at how the S&P is behaving, you can see the S&P is also trading sideways, because this week is all about the US economy. I'm going to say to you now, if the job openings does something on estimations, that's going to be good news for the Fed, because they don't want more people working, because that means they're prone to spending their money, and of course inflation can go higher. I'm not even going to mention that's going to be good news for sideways, because this week is all about the US economy. I'm going to say to you now, if the job openings does something on estimations, that's going to be good news for the Fed, because they don't want more people working, because that means they're prone to spending their money, and of course inflation can go higher. I'm not even going to mention the sad truth, or the great truth, that oil has been taking a stab to the downside, a significant drop to the downside. OPEC is starting to bring production back up again because there is ample supply of oil. What does that mean? Well, it means this, ladies and gentlemen, Asia's growth is mad. That is bad news. When Asia slows down, so does the world, because Asia is one of the biggest purchasers of US debt. And if they ain't buying or spending money, what do you think the US is going to do? The US ain't interested in domestic purchases of bonds. They're interested in foreign purchases. Why? Because you need to buy dollars to do it. Go back into the bond market, you can see bonds are actually doing okay on hourly. We've got a nice balance and they're holding out from this gap and marking up, so that could be good news. The yields are taking a bit of a jump to the downside, but it looks like they could be starting to work their way back up because the downturns due to come out on the job openings. So I'm going to say to you again, if the data this week comes out and suggests that the employment market is going to be struggling and that people aren't going into work, that's a win for the Fed. If the economy is starting to show improvement again, and you've got final services PMI and the ISO services PMI coming in higher than 50, then we've got a problem. It means the Fed doesn't need to cut the rates anymore. The stock market will not like that. The yields will go up. They will not like that. And the stock market will then end up going low. We go to the Nasdaq and the S&P, you can see Nasdaq and S&P, short term, are probably going to be bouncing in and around these ranges on the 4 hour time frame. You can see, look at where we are. We're at the highs of the all-time highs, and investors just wait and see if they're going to get the information they need. More importantly, going into the week after, you've got Fed funds rate and the FOMC projections and the FOMC statement press conference, which is yet again one of this channel's biggest live streams. So make sure that you are subscribing and liking so you can jump onto that. It is a big day to find out what the stock market is going to see, what the Fed has in store for us. Will we get that one Fed cut? Because we were expecting 6. Now there could be a possibility that we don't get any. So what does that mean for Bitcoin? Okay, so you know, you kind of got the idea that if the Fed's not cutting the interest rates and the stock market is absorbing the idea of high interest rates, that's pretty evident because prices are going up, assets are appreciating. It's happy days. It's putting fuel on AI. Because AI is fueling this as a sector. Nvidia, Microsoft, Google, Meta. These are the big boys, the Magnificent Seven, who are the reasons why the stock market is going up. Okay? But from a Bitcoin holder's perspective, we have to suggest the following. There is no real news that could come out in crypto that could affect Bitcoin's price, in my opinion. someone big will have to come out and say, buy Bitcoin. That would naturally send Bitcoin up. Okay? You've got fraudulent behavior all over the place with cryptocurrency. Check this out. Something happened in the UK, York and North Yorkshire crypto investment fraud warning. This came out an hour ago and it says, wait a minute. It says that Detective Inspector Janine Mitchell, head of economic crime, has urged residents to remain vigilant with scammers and take great care before thinking about investing in cryptocurrency investment schemes advertised online. So it says that during May, actual fraud data shown a total of more than £105,000 has been stolen from 15 people residing in our area. They've each fallen victim to the Bitcoin or cryptocurrency scam where they've agreed to pay advance fees on promise of receiving something valuable in return. You might say, oh man, these people are stupid. But it happens to people. It does happen. We can't be ignorant to it. We really can't. Because if it's not happening to you, it's happened to someone else. Be fortunate that it may have already happened to you and you've been bitten once, twice, shy, what have you. But just be mindful. You're never going to get more Bitcoin if you invest in Bitcoin by someone reaching out to you on a private message on Instagram. It doesn't make sense, okay? The only way that actually happens if you invest in 2-year bond market with the US government. You're going to earn more money in a short period of time. That's the only time it happens. Just aside. But please, guys, in the UK, just be very mindful, right? You see those adverts coming up, it's like, you deposit one Bitcoin, you 6. Man, shut the Anyways, back to the story about the whole Bitcoin right now. I'm seeing it on Twitter everywhere, man. People are like, Bitcoin's about to get ready for the huge bull market. Okay, cool, I'm down for it. Completely down for it. We've got the bull flags, bear flags, whatever flags you are flying, okay? Just look at how these flags are really winding people up. Come up, down. It's structurally, it doesn't make sense. In my opinion, there are people like killing on this. They are killing it. Because logically, you would say to yourself, maybe this flag could work. Well, it worked yesterday, and then they're paying the price. It could work today, Bitcoin's shooting up. There's your flag. The prophecy of the flag comes into play. Well, I like to do it a little bit differently. I want to know who's really buying and selling. Who's selling on the flag breakout? That's what I ask myself. Because that's what we've got here. We've got some offers coming into play to encourage the market to start doing the business. And in my opinion, I believe that they bring Bitcoin up to bring it back down again. And with data that's coming out this week, we're going to see volatility in Bitcoin. Looking at the Bitcoin liquidation chart right here, you can see that there's lots of people that are about to get liquidated on Bitcoin around 69,400, sorry, 69,500 and 69,700 zone. Those are people that are using high leverage, low margin. The high margin will appear around all-time highs because that many people up there. Okay? But one thing I want to draw your attention to is this. Right now, you've got, what's this one? The call ratio for Bitcoin. Now, this is really important because reading below 0.61 would mean that you need to be very careful because they are actually building up a consensus about seeing prices going down in the future. And right now, reading on this current day, June 3rd, yesterday, you came in at 0.46. You've got to be careful. There's a lot more reports that people are favouring lower prices in Bitcoin in the near future. Taking that data going over to the market tide over here, and we can see that on a smaller time frame, you can see there's lots of guys coming in. This is on a 1 minute time frame. Over the last few hours, you can see lots of guys are going along right now. Okay? But then when you look at Bitcoin's price action, you can see that the idea of Bitcoin going up, okay? Happy days, it's going up, we're cool with that. But what people are failing to do is they're failing to take profits because they think as it goes up, this is the point that Bitcoin will not stop going up. You can't think like that. Look at the ranges that you've got. Bitcoin keeps on marking up, as you can see here, goes up, comes down, goes up, comes down. And I genuinely think that they're going to hold Bitcoin's price all the way through to the FOMC. We ain't breaking out the all-time high until FOMC is done. Because that's the only reason that we have to understand if the Fed is going to cut the interest rates based on the data that's coming out this week. They're going to make reference to all this data. Non-farm payrolls, if that comes in lower, that's wonderful. If the unemployment rate goes up, that's wonderful. How sad is it that we need people to lose their jobs just so that we are in line with the Federal Reserve's projection of hitting that 2% inflation target? Now, what this data is taking into consideration is the fact that oil price is taking a nosedive. That's why the economy is doing well, because oil is doing bad. They're not using oil. So if they're not using oil, that means a lot more companies can take more risks. Even though interest rates are 5.5%, it's still not costing them as much. Should I say, there's not that much pain in doing business. What really hurt the market is if oil price was all the way up in the 90s. That would really squash the marketplace. That would really have an impact on the ISM and PMI. That would really have an impact on inflation. But of course, the inflation readings like the core price index, the factoring goods or services, nearly twice the factoring food and energy because it's so volatile. But you've got to really consider it and say, hold on a second, Bitcoin's going up, it's holding up very well. You've got oil going down. You've got the stock market effectively preparing itself for a Fed rate cut. And then we could go to other commodities like gold. See gold's trading sideways, not really doing too much. And then we've got GameStop doing this absolute madness, which it is really holding it out. It's going crazy in the stock market, as you can see here. GameStop shares leading up the board, keeping large stakes. Telling everyone it's now got options worth 260 million. The second he dumps that bad boy, of course, it's on the 21st of July. I think it is. It's called. Where is it? In July, 21st. Yeah, June 21st, where the actual calls expire. So it's very interesting to see how that plays out. And yeah, we've got a very interesting candle all the way up here. And it's just be careful when you're trading this. Just don't fall for the hype. He's at a $220 million call option. It could actually slump all the way down, you know, and his options will be worth by June 21st. So it's going to be very important that he actually does something about that. Okay? Any questions, ladies and gentlemen? Are we all on the same page right now? Because if I consider for the holders where Bitcoin is at, I don't think Bitcoin will clear the all-time high until we get to FOMC. Once FOMC is done, and they say yes, we are going to cut interest rates to be high to the upside. And that's why I said that Bitcoin is, in my opinion, a true representation of where investors' heads are at. BlackRock ain't been doing nada, not been doing anything. Grayscale's been buying and selling Bitcoin all day. Okay? But BlackRock hasn't really been doing too much, which pretty much puts things into perspective from where I think Bitcoin's going to go. 150,000 by the end of the year, Tom Lee? 150,000? I'd say 85,000. That's what I think, 85,000. But what event would have to happen to send Bitcoin to 150,000? You've got to really ask yourself the question, what would have to happen? Some dude would have to turn around and say, buy Bitcoin, that would be Elon, that would be anyone, okay? But to get Bitcoin to 150,000, okay, so let's look at the logic right now. 150,000 from this current price, ladies and gentlemen, we're talking about 90. But by the end of the year, we're looking at 117% gain. What could actually create that madness? The US dollar making Bitcoin maybe 10 most likely, in my opinion. Considering that Bitcoin behaves like this, and it looks like it's getting ready to break out because they've come back down to effective recovery points over here. We've got one more zone down here that we need to pay close attention to, and by the principle of the 420 method that you may have been talking about back in the day, for those of you who are new to the hybrid system, the 420 method is taking, for example, a $10,000 investment and splitting it up into increments of 20%. So, for example, you've got 20% to be 2 grand, 20% 2 grand, and another 20%. That collectively gives you 60% of your $10,000 investment. This is what we call the working capital of your investment. Now, 2020 method says that you are going to do DCA with Bitcoin as and when you see these drops or these consolidations. For example, you put 20% right here, which we did say to you guys to do back in the day during May 21st, back not May 21st, back when Bitcoin was on the day time frame, it was inside this range right here. Okay, and you would have seen a return on that after this last move up on Friday, 24th of May. Now, with that being said, what you're looking to do for anybody that's new to this 420 method, and it's really for holders, what you want to do is you want to buy Bitcoin as it's going down. That's what the whole point of it is, okay? And so, for example, you take 20%, you buy Bitcoin here, you buy Bitcoin 20% here, happy days, you wait to see. Out of these 20% right here, this is your working capital. If you make money on Bitcoin moving up, congratulations, maybe take 10%, 10%, and leave 30% of the exposure in, okay? And then put that 10% back in as price corrects. So hypothetically, if we're going to see Bitcoin maybe rise, we trace continuation out. This area right here will be an area for you to start loading on the remaining 20% or 10% of the from the previous positions. Now, what about the 40%? Well, the 40% is for a chaotic event. What is a chaotic event? A chaotic event, ladies and gentlemen, is something like this, where you see volatile price action, okay? Going into the ETF itself, you can see this big drop to the downside, which was a news play, and then you see Bitcoin coming all the way back up. Something like this, where they drop down aggressively. Your whole goal is to load that 40% of the capital, which is effectively a short-term pool of liquidity that is used to take advantage of short-term volatility. The goal is to always have capital on you, because you might see Bitcoin drop down again, and if you're already in with your 40%, you've got no more capital to work with. Your working capital, which is the 2020, is already tied up over here. Hypothetically, if Bitcoin were to just tank from this point, you've now got 40% of your initial 10K balance that you can load up here and then take profit as it works its way back into the range. Now you've got more of a 40%. It's higher in value. So that the next time it happens, you can then load up another 40%. Your 2020s are in there for the long term. Don't worry about this. This is the working capital. You can absorb more of a movement with the 2020 exposure, because you're using this 20% at different points in time. You might load up Bitcoin 20% in this area. Maybe you want to see Bitcoin come down, you load up another 20 in this area down here. And then as Bitcoin starts to work back up, so down for it. Gold, you can see gold's trading sideways, it's not really doing too much. And then we've got GameStop doing this absolute, like, gold market effectively preparing itself for a federal rate cut.
75,500. Is he okay, Raj?
I don't know, I'm scared to touch him. Yes, it's blowing on him. I'm scared if I touch him, he's gonna start growling.
Okay, yeah, don't then.
And then we quickly go over to other commodities like gold. You can see gold's trading sideways, it's not really doing too much. And then we've got GameStop doing this absolute madness, which it is fraud because it's so volatile, but you've got to really consider it and say, hold up, the stock market gold, you can see gold's preparing, it's been holding out very well. You've got oil going down, you've got the stock market effectively preparing itself for a federal rate cut. And then we quickly go over to other commodities like gold. You can see gold's trading sideways, it's not really doing too much. The offers are coming in. Look, this is where they're selling the Bitcoin. Look, selling. It's not when it goes down, please, get that out of your minds. The weak hands are selling the Bitcoin because in order for them to sell, someone has to buy it up. So all this buying here, you look at it, it's negative. Oh my days, Bitcoin's tanking. Man, you need to just get rid of anyone on Twitter that is saying to you that when Bitcoin's tanking, the selling pressure is on. No, it's not, because you can't sell if no one is buying. That's the fundamentals of this chart right here. You can't sell if no one's buying. It would be deemed a pointless marketplace. You can't have a guy who's selling and he'll be like, yo man, I'm selling too. I'll sell your sell order. Huh? How does that work? If you're selling, I'm selling. Are you selling my sell? Hold on, I'm confused. Are you selling my sell? Who are you selling it to? I don't know, I'm just selling. Wait a minute.
Facts, bro.
If you're selling and I'm selling, who are we selling to? Another guy that's selling? You're selling to a guy who's buying it from you. So who's in control? When price drops, the buyers are in control. When price rises, the sellers are in control. When price is rising, you're buying. You get there with your friends. Are you buying? I'll buy from you. No, I'll buy from you. No, man, let's go put a buy order. So who's going to buy my buy order? It doesn't make sense. This is the market. This is how the game works. Bids, buys. Look, down here. Someone bought $10 million worth of Bitcoin at 68,610. I will regurgitate this continuously to all of you every single day. Because when it sticks in your mind, you will not be that person that's selling your Bitcoin when you see it taking a shoe bag to the downside. But one important aspect to it If someone's buying $10 million worth of Bitcoin, that means they can absorb a little bit of a retrace to the downside. You're buying $10 million worth of Bitcoin, you're in a position to take a little bit of a hit on it because you can then buy more. Don't look at it from the perspective of a retail trader. Like, oh, Bitcoin keeps on going down, who's losing money? You've got pools of liquidity that are being put in the marketplace. Look, this is money here, this is open interest. This is people borrowing money in crypto to trade leverage. Just go to this, the liquidation levels. Look at all of the liquidity here. Look at it. Lots of traders are running their shorts. Behind all these shorts is liquidity. Margins that have been matched by the market maker. You go long, he goes short. You go short, he goes long. That's the way the game works. And you really want to dive into that, just look at your liquidation points and your margins. How is it that automatically, once you open a trade on leverage, your margins are recalculated because the market maker has that agreement with the exchange to match liquidity. It creates the smooth running process of you being able to buy and sell. That's the market maker's obligation to you, and that's the obligation to the exchange that's providing him, the participants, the retail traders, the chads, the dudes who are coming in to speculate on Bitcoin's price going up or down. You don't realize, but you're using a bank, you're borrowing money. You're all about decentralization, yet you're using leverage. You're borrowing money from a bank. And that's exactly what this chart is. This chart shows you who's borrowing money right now. Look at these poor mother truckers right here.
Damn.
Some dude, he went long at 69,525. Now Bitcoin's starting to pull back a little bit. His liquidation point is right here. Okay? Or it's right here. There you go, 650.
What?
Be a bit careful when you open the fridge.
So in order 650 there, his liquidation point is right there, 69,141. He's about to get liquidated. The cost of doing business. High leverage, low margin, you're going to get smacked. They buy when it's rising. For God's sake. Please, don't buy when it rises. You buy when it drops. You're doing the opposite. Because there's not enough retailers to move the market. And people will challenge me on that. They'll say to me, okay, Tino, why does price reverse from one point to the next? Well, is it because there's not enough buyers? There's no such thing as, in my opinion, look, in my humble opinion, ladies and gentlemen, all right? And I'm just going to put this down, I'm going to put this down to retail trading education, right? Supply and demand does not exist in the marketplace. It's opinion. That's all it is. Right? Now, when you dive into it, you can say there's stop runs and liquidations and, you know, you've got all your ICT guys and all of the fun and games that is used to effectively, and your Y-cops, that is effectively used to determine what is a level of support and resistance. It's psychology. Look, and anyone says otherwise, fuck them. Listen, this move to the upside, it's not because there is a supply, there's no one there buying. Shut up, please! That doesn't make sense. Of course there's someone buying. Because if there is no consistency in the stock market or in any asset class, it would collapse. There has to be a continuous ebb and flow of orders. The only reason price reverses from that point is because everything that's happened in this move to the upside has been designed to offer price. They've been selling. And they have now got an influx of a supply of orders coming in. It's not because there is a supply, no one's interested. It's because the powers that be that will allow the buyers to transact have stopped transacting. That means they're changing the program. They've got the liquidity trapped here. They then have to now clear their books and bring it all the way back down, which is why you always see price going back into the vector candles. They spend a bit of time marking price up, and then they bring it all the way back down again into the same bloody zone that they moved from. Look, it's there. You could say it's hindsight, but ladies and gentlemen, go back in the charts and prove me wrong that you don't see this happening all the time. Man, if you go back into my live streams from back in the day, I've had comments, even people say to me, Tino, you were talking about Bitcoin here when it was around the 31,000 zone 2 years ago, and look at where we are right now. It's doing exactly the same thing, and Bitcoin's at 61. You can't tell me that they don't repeat themselves, because they do. But the logic of supply and demand, this up here is not a supply zone, okay? It's no such thing as a supply. There will always be someone to buy and sell. But because market makers transact on retail's activity, when they're ready to reverse price, they will change the program and start hitting all of the orders that have been built beforehand, which is what the hybrid system is. It shows you where that actual behavior has been coming into play. Look at the green vectors. Start marking up to bring it back down. They've done the business. You don't buy when it's rising. Holders, different story, because you're considering a bigger time frame. I'm a scalper. I have to look at the surgical movements in the marketplace. I have to build a
He went straight to me.
consensus about what could be happening at this one point, or this one point, or that one point. And I have to put it all together and take the experience of what I've been in the market and put that to the test. When a holder's considering that information, a holder would say they could be buying loads of Bitcoin here, and that would be valid to say that. Why? Zoom out. Have they been buying? Yes or no?
Live?
Comment. Have they been buying in this area? The answer is yes. They've been buying here. 4.98 million in this area. 6.7 in this area. Go up a little bit more. Where is it? There was a $30 million order somewhere here. Where is it? There you go. There's 10 million, 12 million up there. They've been buying Bitcoin here. But people think they've been selling it. They've been selling up here. But when they see it rising, they think they're buying it. When they see it dropping, they think it's selling it. Fuck's sake. This is not how the game works. Because it would be deemed a pointless marketplace. You can't buy if no one's selling. You can't sell if no one buys. The only true form of supply and demand works in retail. There are 3 jumpers that a gentleman sells. 1 red jumper, 1 yellow jumper, 1 green jumper. He opens his shop. Each of these jumpers he has 5 items of. That didn't make sense, but he's got 5 of each. His business goes about its day. He then closes his business. He has a stock check. He's got 2 red jumpers left. He's got 3 yellow jumpers, 0 green jumpers.
He sold
By
all
the law of supply and demand, he needs to provide the supply to meet the demand for the green jumpers. In this game, there's no such thing as supply and demand. People will call me out and say you're full of shit, but tell me why that when there is this move to the upside, it's because people have stopped buying. Shut up. They've stopped selling. They're selling into strength. If people keep on buying, the market will just keep going up. It won't stop. Where's your supply and demand then? There will always be buyers. There will always be buyers. There will always be sellers. There's no such thing as a supply, no supply, or this is a supply area, or this is a demand area. We throw those terms eloquently and just think we sound like we know what we're fucking talking about, but it's not true. When price is dropping, it's because there's no demand. There is a demand because it's dropping. Demand is they're buying and it drops. Anyways, ran over.
I love Tino.
What would you do? Like, get kicked, get banned from Tino's channel.
That is true.
Is he banned?
That is true.
He could if
That
he
is
said
very
something
true.
super like not nice.
All right then, ladies and gentlemen. What we got here? Tino, hold on, we've got a question here, sorry. Tino, if there are more bids than asks when price drops, why does it keep on going down? Because the way people are reacting to price going lower, it's all climatic, okay? That's why when you see a climatic move like this in Bitcoin, why do you always see
Why is it not there?
these green vectors?
think you
The
gotta
green
pick
vectors give you the clue.
member.
You
No.
don't want to buy vectors. Here is something for you, and I'll let you guys leave and continue about your day. Look at this. What's the difference between the green vector candle up here and the green vector candle down here? What's the difference between the two?
Because there's vector candles that he can trade towards, and then
Fundamentally,
it's at
the
the
green
break
vector
to
candle
top.
tells you that they're getting ready to move up. Where it's moving up from is very important. This right here is a climatic candle. Look how strong that candlestick is. Anyone in retail on Twitter, X, would look at this and say, Bitcoin to the moon. Shut the fuck up. That's not what that candle is. That candle is a trap to make you think it's a
Trap!
because then obviously the next candle afterwards ends up sending Bitcoin down. It's a climatic move. What's going on here is the retail traders saying, oh no, Bitcoin's moving. Oh, it's broken out. Okay, cool. I need to wait for confirmation. Makes the move up. Oh, right, okay. It's pulling back. I'm going to get in on this move. Bang. They get in, and it's a beautiful, strong green vector candle to the highs. And then this one little candlestick here sweeps the high, and then they end up reversing it. All those retail traders that waited, hesitated to buy, they're buying at the top side of it. You want the proof? Look at this dude up here. Look at these dudes up here. Now, these guys would have realized the return. But they're not paying themselves, and that's the truth of the game. So the difference between the green vector candle up here and the green vector candle down here is this candlestick is appearing where people naturally don't buy. They don't buy at this point. They think the selling is coming in because look at what's going on. Bitcoin's in a downtrend. The green vector candles give you the clue. Red candle, green candle formation, yippee-ki-yay to the upside.
Yippee-ki-yay.
That's how this game works.
That's such a funny term, bro.
This, in principle, is what you really want to just dive into. Look, there it is again. Climatic candles. Shift out. Roll over. They're trapping traders, and that's what this game is all about. Remember, guys, the idea is, wow, Bitcoin. The idea is, they have to give people a reason to buy. They have to give people a reason to sell. Okay? If they don't get those reasons, then the market will not cease to operate. They won't get their open interest put out. They won't be able to charge your funding rates that everyone's focusing on. Capish? Does that answer your question?
That's my favorite
Nvidia
thing.
might see 486. Only a crash on Nvidia, or sorry, a 20% drop in the marketplace, okay? For example, look at that, man. What a projection, man. For God's sake. Do I think Nvidia will see 486? Are you talking 486 or 1,486? If we're going to see Nvidia taking 486, that is a 58% drop in its market cap. That would be devastating. But I can't say it won't happen, or you can't say it could never happen. Can't say it can never happen. Okay? Okay then, right. Bitcoin making this nice move to the upside. Happy days. Is he saying we should be looking for shorts here? Look, please be responsible with it.